What's up, guys? Eric here from MajorLeagueTrading.com, and in this video we're going to be changing gears a little bit from the norm and stepping out and doing something that I've never done before, but I had a ton of fun doing it, and that was reaching out to the MLT community and doing an interview with one of the top students from last year, 2021, Mr. Jake Ricci. He's a 25-year-old trader from the Bay Area in California, currently living in LA now. And we talk and go through a bunch of different things from strategy and discipline and psychology. And he tells me, a bunch of different things that have helped him along the way in being with MLT for about the last 2 years. And overall, it was a ton of fun. I hope you guys really enjoyed this video. And a quick side note, something that we didn't talk about in the video, in the interview, it just slipped my mind, but that he's told me off camera is that each and every day, he starts his account with $35,000, and you'll find out in the video just how much he made in 2021. Take care. Hope you guys enjoy the video, and I'll see you on the next one. All right, let's get started. Welcome to the stage, Mr. Jake. How are you?
I'm doing good. I'm doing good. Thank you for having me, sir. I'm excited to be here.
Yeah, man, definitely. It's been a long time coming. We've been trying to make this happen for a little bit. So where are you at right now?
I'm in LA right now. Just got down here a few weeks ago.
Okay. And what are you doing? Little bender vacation?
Little vacation, yeah. So it started off as me wanting to just see if I wanted to end up like moving here and doing like a month down here in an Airbnb and see if because can trade work from anywhere, right? So like as long as I have my desk, which is what I had to pack up and drive, then I'll be good. So I decided to do an Airbnb down here, and I've been loving it so far, right? So I have a lot of close, important people to me that are down here. My sister's down here, so my best friends are down here, my girlfriend's down here. So it made a lot of sense for me to sort of spend some more time down here, and I do think I'll be moving down here full time, right? So now it's just about finding a place to live. That's the next step.
Yeah, which LA is not it's not the cheapest by any means.
No, it's not the cheapest. It's not the most fun, but I'm hopeful that I'm considering looking into like buying it would have to be a very small, place that I would live in for a short time, then eventually start to rent out. So I'm going to try and make it an investment rather than just paying a stupid amount of rent each month. But we'll see how all that goes. Got to find something that's not too stupid expensive, which is difficult. Yeah.
Or you could always go the roommate route if you wanted to, but
no, I never again, sir. Never again. I think I've reached the point in my life where roommates are off the table. I love living by myself. Yeah, I had roommates. I loved my roommates, but I'm happy to be at that point in life where I do not need roommates.
Yeah, no, I feel you on that one. I did that when I first moved up here. I did that, and it was with my cousin. It was a 3-bedroom. It was my cousin, her boyfriend, obviously, and the master, and then me and this other guy that they worked with. And he had 2 cats, and it worked for like 8 months, and like that was it. Back when I was an electrician still, so
right.
It was definitely interesting. Learning lesson. I think everybody should go through it at some point,
Oh yeah. I lived with roommates for like 5 years in college, and 4.5 years in college, and I loved it. Like I had a ton of fun with them, but ever since I moved into my own place, I will now never live with a roommate again. I don't think so.
Unless it's windy.
Yeah. Let's be patient on all this. I will be patient.
It's a good move. So how I don't actually know where you lived before. How far is LA from quote unquote home?
So I was in San Jose area before, which is like an hour flight, not even that, and then it was like a 5-hour drive, so it's not too bad. It's just Northern California to Southern California pretty much, and it's not like true Northern California, but the Bay Area to LA pretty much, so it's not too far, honestly.
So San Jose is like outside San Francisco?
Yeah, it's like an hour south of San Francisco.
Okay. All right. Yeah, we did a road trip. I want to say it was 2015 or 2016, and we left Virginia, went to Nebraska, obviously where Emily's family's at. We were there for a night, and then we drove 22 hours straight through. We didn't even turn the car off at all. We just rotated drivers to Washington State. We had a wedding to go to, And we were
Damn,
like, all right, we'll
that's
make it to the
amazing.
wedding, and then we'll just figure out our way back. And so we worked from Washington all the way down like PCH and
Yeah.
everything, like through the redwoods,
Yep.
down into LA. We were on our way to San Diego, um, and we stopped at a Mexican spot and started drinking some margaritas. And then everybody's like, all right, let's just go to Vegas. So we detoured and headed to Vegas. We get to Vegas. I kid you not. This is the only time I think this has ever happened. We get to Vegas and there is not a single room available
Really, the whole
in
city's just
in all of Vegas. It was in, so we were homeless for the night. We we literally just hung out in the casino. Like we had our bags and everything in the car.
yeah,
We just hung out in the casino. It was finally like 8 a.m. and people started checking out or whatever that they could like
yeah,
turn the rooms over. And then we slept until like, afternoon time, got up and
yeah.
finally had some like lunch.
Right,
Yeah.
finally had some real Vegas time. Yeah.
Yeah. So we were homeless in Vegas for a night, which was kind of
Oh
cool.
man,
But
kind of cool. Kind of sucks though.
yeah, yeah, yeah. I mean, when you're not like really trying to be up all night in Vegas, so you're not
Yeah.
really trying to do much, but you just play some craps and yeah, it is what it
Yeah.
is. I'll do it again though,
Oh
if the
yeah.
opportunity ever presents
If the
itself.
opportunity presents itself, right?
Yeah, I'm not gonna turn it down. So
I Vegas and me are not friends. However, I'm going back in like May of this year for a concert. So even though I'm not friends with Vegas, I'll always find my way back there somehow.
that's one of the like best things about being on the West Coast is like Vegas, Arizona, all that stuff's like there's super cool things to do out there within like a 2-hour flight.
Yeah, and
If that.
Vegas flights are so cheap. It's like 40
Yeah,
bucks to get from LA to Vegas. Like it's just not expensive.
yeah, they
That
want you
might be a
there.
stretch, but it's very cheap. Yeah.
They definitely want you there.
Yeah,
There's
exactly. Yeah.
there's a reason that
There's a
they're so
reason. Yeah.
cheap.
Yeah.
All right, well let's. I told you I should have closed those charts.
Yeah.
Um, let's dive in and take a look, and actually not even take a look. Talk about the markets.
Yeah.
And so, for those of you guys that are listening in here on YouTube or Facebook or wherever this video ends up going to, this is Jake. How do you say your last name? Richie.
Ricci. Yeah.
Ricci. Jake Ricci. And we kind of met like what, middle of 2020 ish.
I want to say somewhere around then, or maybe even a little bit. I think it was actually 2019. I think it was
2019.
2019 because 2019 is when I found the Major League Trading Discord. I kind of stumbled onto it by mistake, actually,
Okay.
and then end up seeing the stuff that you were posting. And I was like, man, this guy, his levels are very accurate. They always seem to work. It always seems to stop right at the same point that he mentions. So I started to pay attention to what you were saying a lot more, right?
So it was a good mistake then.
It was a good mistake, probably one of the best mistakes I've made in my trading career. I'm very happy about it.
So all right, so we're going on a little over 2 years maybe,
Mhm.
and last year ended up being your best year
Yes.
yet. What was that? What was that looking like?
So it came out on my day trading account. It came out to a little bit over like 280,000. And so it was hands down my best year. And what was really cool about it was it was consistent. There was a bunch of big winners along the way. Some in my swing trading account though. But it was, it lacked a lot of big losers, which hadn't been the case in previous years. Like in 2020, I had a good year. I made money, but it was just, if I hadn't done a lot of the dumb mistakes where I lost 10 or 15 grand on a singular trade, then I would have made some real money in 2020 as opposed to, well, I was happy with it, but it was a good, I don't remember the exact number in 2020, but I was happy, right? And it was just, but nonetheless, I had watched myself give away a good chunk of some of the profits I had made at the end of each month. It was something in 2020 with me that would happen frequently is at the end of the month, on the last day of the month, I would give back like, I would take a big loss because I would just try and I would push it. I was trying to push to get a big end of the month, whatever the case may be. So the coolest thing about 2021, aside from like the actual dollar number, which was very cool, but aside from the actual dollar number, was just, it was the first year that I really felt like I had taken that next step towards getting fully over that hump that there is in trading, right? Like I had been consistent before that. I had been making money. I was a good trader, but I just was making these mistakes that would cost me a lot in the long run, right? And I feel like this was the first year that I took a step away from that.
Okay. So day trading account, 280,000.
Mhm.
Swing trades and all. What was the
Swing trades
total?
and long terms, it came out to like just under 500, I think, because it includes the swing trades. And then my long term did real well, obviously. Normally I don't count that, but I just started that this year. So I don't really know if it's like a long term. Plus, I swing trade in it because it's basically two swing trading accounts. But I consider it long term because I won't withdraw from it. But yeah, so it was a really good year. It was hands down my best. Yeah, yeah.
Very nice. So let's talk about that consistency. Or I guess not even necessarily consistency, the holding back from having those, last day of the month presses. What do
Mhm.
you think it is that, ended up like really triggering that for you kind of in your mind as to this is stupid? Or like, were you just not paying attention to it until the end of the year 2020? Um, just like walk me through that a little bit.
So I wasn't paying attention to it as much, and then I also think that I wasn't taking it as seriously. So I had a full-time job. So just for some background, I've been trading for coming up on 4 years now. In 2022, it'll be coming into the. I'm over four now, coming into that fifth.
Okay.
And so for me, I had been trading with a full-time job, which I didn't have a very intense full-time job, but I had a job and I had a paycheck, right? And it was April of 2021 that I left that job to do this full time. And I think once I started to know that I was like in 2021, it really started to hit me that like, dude, you're gonna be doing this full time pretty soon, or that's your plan. This is a job now, right? Not that it wasn't a job before, but this is literally your job. And that kind of flipped the switch for me to try and start taking it a little bit more seriously. And then that being said, there was a little bit of back and forth, right? Because as soon as I actually left my job in April, or I would quit in April, but I didn't depart until June. But nonetheless, throughout that window and even a little bit after June, I saw some hesitancy in my trading, right? Because it was the first time that I was trading for income, not for growth. And that was hard. So, side note, don't do that until you're really, truly ready to do that. But once I did that, I found myself being hesitant for a while. I was not taking the same kind of risks that I would normally have taken. And then I was just doing things a little bit differently. In the beginning, that worked in my favor and against me, right? Because I was missing a lot of good trades. I wasn't letting my winners run as much. But the flip side of that is I had very minimal large losers, right? It was a very minimal knockout trades that truly knock you out where you're like, holy crap, I really went on tilt. Um, so I think that switched for me to start taking it more seriously. And then truthfully, the biggest flip that happened for me was I went through some personal stuff in like the end of September. And then my mindset completely took a different approach, right? When after I had gone through and sort of sorted out all of the personal things that had happened, I went through some rocky roads in that early September phase. I think the market was rocky. I decided to give the market a lot of my money. But there was one day where I had been talking to my sister, my mom, and there was a flip. And so this is a very long winded way of saying what truthfully flipped and made me take this more seriously was when decided to take it more seriously. I had a conversation with my mom, my sister, and I decided that this was going to be what I was going to do. I'm going to take it seriously. And the only thing that was holding me back from being incredible at this, as opposed to just pretty good, was me stopping and taking it seriously and saying, yeah, I'm going to get up every morning. I'm going to make my bed. I'm going to do the everyday consistent habits. I'm going to put on funky pants. To do all these little things and have it really stick out and actually be like who I am. And it's worked, right? And it really has worked. So I took a big leap from the beginning of 2021, but the end of 2021, Q4 was my quarter. The end of Q3 and Q4 was my quarter, and it felt good to finally sort of like take the step from everything I'd been working for the previous 3.5 years.
Very nice.
So a
So
long answer, but sometimes I rant. You know this. Sometimes I rant.
there's a lot that we could dive into that with,
For
for
sure.
everything from the funky pants to, you holding yourself back. Which I think is, I mean, ultimately, like, I mean, we've talked about it, the making the bed and the doing the same thing day in, day out.
Hmm.
Um, I mean, it's it's at the end of the day, it's those little things that end up, you know, making obviously a very big difference.
Right.
Whether that's a dollar amount or not, I think is kind of irrelevant, right? It's a matter of just good trades,
Right.
good discipline, and
Right.
then the dollar amount comes secondary to that.
Right, exactly. And I think I will say, it's interesting to me, right? Because you sometimes you talk and you think that these little habits that you do, they don't really make a difference, right? You think that it's just like initially when I read Trading in the Zone 3 or 4 years ago, and they said do everyday real life, make your bed, do all these things that Mark Douglas talks about. Um, then I remember being like, whatever, right? It's not about that. It's more about the analysis I do. I just need to get my strategy down, right? Nowadays in my life, what I realize is that the one bad day that I've had in the past 5 months, the one truly bad, where I went on a little bit of tilt. I remember you and I talked about it. It was not the day we hopped on voice chat, but a little bit different day. We talked about it. I went on a little bit of a tilt and gave back much more than I should have. I should not was the one day that I did not wear funky pants. It was on the Eli Lilly day because I swung a position and it didn't work out. But in the morning, I said I'm not going to trade. I don't need to put for reference for everyone who doesn't know. Every morning I wear some kind of funky pants. It's my real life everyday habit that I do every single day as I trade. Because if I don't do it, then waking up on California time and these on the West Coast means if I don't put these pants on, I don't have enough energy to be focused and disciplined and really sit down and trade. That morning, because I was like, oh, I'm not going to trade. I'll just manage this one swing trade. Whatever. I'm not going to put the pants on. Lo and behold, I did not just let that swing trade ride. I tried to take other trades that were unplanned, and that did not work. And I ended up losing. That was hands down the biggest loss in the past, couple of months, right? And it was a totally unnecessary one that could have been avoided had I followed my rules and put on my funky pants. Like it's that serious of a thing. So when the psychology aspect, when you start to slip on it a little bit, remember that those slips will be the ones that cost you the most money.
Oh, definitely. Yeah, I mean, something as simple as, for me, something as simple as like I have this. It's not a candy bar, but like a protein workout bar that I have
Yeah.
every single morning.
Yeah.
And like it's coconut. It's freaking amazing. Like I look forward to it every single morning,
Right.
right? And that's what I eat on the way to the gym. So it's like, for me, that's my funky pants like thing I gotta have.
Right.
Um, but you said something. So I was listening, but you said something, so I was looking it up. I put up a poll, and I asked, what's the number one thing that I can help you with in your trading for 2022? And I think we talked about this.
Right.
So
Yeah.
answer, A, be capital, B, strategy, C, discipline, or D, psychology. What do you think out of those four ended up being the number one spot? The most
I hope
answers.
psychology, right? That's the one. That's what I hope.
That was the least.
R-
That was
I
the
remember
least.
I clipped that one, and it was the right. You made it the right answer, right? I know none of them
Yeah.
were right, but that was the one you made the right
Yeah.
answer. Oh, that
Yeah.
was
I
the
said
least.
I
Okay.
said no wrong answer, but yeah, I
Right.
had to pick
Right.
one, obviously.
Yeah.
So yeah, the vast majority, about 40%, a little over 40% came in with strategy.
Strategy. Yep.
Um, Capital and discipline were tied, like right at a little over 20%.
Okay.
So there was 12 votes that separated capital and discipline. Those were basically half of strategy, and
Right.
then psychology coming in the very last spot with like a little over 16%, 17%
Okay. Yeah.
of the total.
I'm hoping there's the followers that came from me to your page. I'm hoping they're the ones who selected psychology. If you're watching this right now and you selected psychology, I appreciate you.
So yeah, I mean, I brought that up just because I think people sleep on just the fact of how important that is.
Yeah.
It's always like this next shiny ball, moving average, Fibonacci, Elliott wave, moonlight, full moon, whatever. There is actually a strategy around
The
astronomy,
moon.
which is
I've
kind of
heard about
interesting.
that. The moon. Yeah. The
Yeah,
moon. Yeah.
yeah, yeah. I mean, so there's there's a strategy around basically anything and everything at this point.
Right.
Any way you could kind of, think about it. So, um, so yeah, I mean, I think people just sleep on that so much, and it's honestly, in my opinion, 90% psychology
Yeah.
and 10% strategy.
Yeah.
Like, and that's when you think about it. We ran that poll the other week, just asking if people had, a red or a green year, and it was fairly. I don't think it was as honest as it should have been.
Oh
Um,
yeah.
Unfortunately, but it was pretty 50-50, like 55-45. It depended on, like, at the end it kind of evened out. Um, but yeah, I mean, I think when you really get down to that, like 10% of traders actually succeed.
Right.
Um, I think that's the 10% of traders that put psychology first and the mental
Absolutely.
aspect of it, in the forefront. Um,
I mean, so like even for me, the people that I grew up, so to speak, idolizing in this trading world when I started out, because it's all done through Instagram, right? People like yourself, people like Umar Ashraf, right? The people who have above all else this insane discipline, right? Like that's the thing that separates the best of the best, because you, an example, you and Umar do not have the same strategy at all, right? He plays a totally some of the same concepts but different strategies, right? It's
yeah,
just very different strategies. However, that does not make you a better trader, him a better trader, and whatever. What makes you both great is the fact that your psychology allows you to execute your strategy extremely well. So, for example, you and I use damn near the exact same strategy with a couple of tweaks here and there, right? And so that to me, I think ultimately when because I took a really big leap, like I talked about in that the end of 2021, and when people or myself, even when I asked myself, how was I able to take such a giant leap relative? Excuse me for 1 second. Answer that for me. Sorry about that. We might have to edit
good.
this version of that. Uh, but the reason I was able to take such a big leap is because I had the strategy aspect of trading down for a couple of years, right? And I had been able to show consistent profits with it by that, even before I started to transition my strategy into more along with just the candles and the trend action stuff that you talked about. Even before it was working. The strategy I'd been using was working, and had really gotten good at reading the candles and the price action, right? The reason I think I was able to take such a quick leap in sort of the end, just from a number standpoint, in the end of 2021, is because I had the strategy, the 10% part of strategy maxed out or close to it, but it was just the 90% psychology that I was running on like 50%, right? I was running on half, and all of a sudden I became running on 85, 90. I've got that, pushed that much closer towards the actual goal of where it should be. And that was what able to make me like, I think as soon as you, basically a long-winded way of saying, as soon as you're able to get your psychology down, it will be exponential growth, truthfully, especially if you've been doing this for a while, because your strategy is something that you will be able to execute more consistently as soon as you have the psychology.
Yeah. So, I mean, when it comes to strategy, like at a certain point, you could argue that, one individual, whoever, um, would kind of develop their own
Right.
with enough time watching the markets.
Exactly.
Um, you're gonna see, and I talk about this all the time, is just screen time. Like,
Yeah.
I can tell you specifically what levels are going to be, and like looking for a reaction or whatever the case is from a level. But until you actually watch that price action form in real time, and you see it 100 times, 1,000 times,
Mm-hmm.
1,000,000 times at this point, until you see that, like, you won't be able to, visually, remember that. But
Right.
once you do, like, you'll get to the point to where, you can see those things. But if you don't have, like you said, if your psychology is only, halfway there, and you're seeing something and going, oh, this should bounce here because it's a level, and you don't actually, your emotions, your psychology gets the best of you, instead of waiting for that confirmation or waiting for that, next change of trend or that next bar or the bar to close or whatever. You just go, oh, I'm gonna try and pick up like $200 here. Let me just like
Right.
scalp this. And it turns into like an $800 loser.
Yep.
And then now you're battling from behind because you're like, oh, I'm down $800. Like, well, let me, whatever the number is, let me
Exactly.
try and, make the next trade.
Yep.
And now you're down $1,600 or whatever the number is, right? And it just continues to,
And that,
to
yep,
do that.
and
And
it snowballs. It snowballs.
yeah. And the same thing happens on the other side of it is
Mhm.
like, once you actually have that in place, it isn't as fast because not every day is going to obviously have a setup. Um, but you start to see like, like this week has been okay. Moderna, ZS, Roku. Um, again, I took it small with the spread, unfortunately.
Yeah,
But
there was a couple of nice ones this week, but it hasn't been easy because like Roku worked really nicely, but it didn't like it stopped both of us out. I mean, we made money, we made small profit, and you made something on the spread holding that. I think I
yeah,
had a really nice day trade on it that would have worked even better, but it gave us the runaround, right, where like it started to get back above. So it's been moves have been getting follow through, but they haven't been straightforward moves, right? And so, but no, I completely agree with you on screen time, right? Like that's one of the things for me is that ultimately there's nothing that replaces the chart time, which is you just watching it. There's the thing that came to me the most to my mind the most when you said that is that no matter what we try and do with trading and try and break it down as a science and say that you need to do this when this does this, when you do this, when this does this, and it's really important to have your strategy does need to be algorithmic and scientific to a certain extent, but there's an art form to this, right? There's a sense of like how you are able to interpret the candles and the information that we're getting and how you're able to react to it is something that can't really be scientifically defined, right? Like there's an element to this that you can't read in a book or you can't learn from me telling it to you. You need to see it in your own and experience it on your own before you're able to get over that hump, right? Now, it can put you in a good position to be able to understand that, interpret it well, but as much as we all want it to be a science and have it be definable, it's just not. There's elements to this that really make trading an art form more than a science, in my opinion.
yeah. I mean, I agree with that. There's definitely, like you said, the strategy is fairly concrete, but
Right.
how it is that you get in or out or why can be, flexible. And I think has to be too at the same
Mm-hmm.
time. And at the same time, I think what keeps you out of trades is probably even more important than what
Yes.
is getting you
Yeah.
into trades.
Yeah.
Like, no, like you said, those, last days of the month were, probably cost you, you know, 50, 60, $70,000
Yeah.
in 2020.
Yeah.
Like,
100%. And
it,
it's like, was that worth it? Right? Was those worth it? It's like I could have. It's like those Fridays. Wouldn't I just prefer to sleep in? Like what? And
yeah,
so the other line that I've heard recently, that as I've heard this before, but it's stuck in my head a lot recently, and I've been saying it a lot recently, is it's a really valid question. Who are you the boss or is the market your boss? Right? And I love that question because if you make this a skill that you have and that you are able to execute on, then it doesn't matter what's happening in the market. What you just have to know is that on the days that you show up, you're going to execute well and perform well, right? And so if there's a day where you don't have the mental capacity to show up and trade because this is a very stressful thing to do 5 days a week, if you don't have that mental capacity to sort of step up and do it that day, be the boss and walk away. Otherwise, don't let the market boss you into taking trades that you shouldn't take.
100%. Yeah.
Right.
I
So
mean,
that really, I heard that and that really stuck with me recently.
yeah. And that's, so I know you have this, but
Yeah.
the daily plan, I mean, I'm not even, I just pulled this from the other side of my desk. It
Yeah.
sits on my desk every
Yeah.
single day. And the very first question, I'll read it to you guys. And I'll put a link down below as well for this if you guys want it. But the very first question, it says, rate how you're feeling today. And it gives you a little scale of, 1 through 10. Um, if you're in a 1 through, and it gives you like a little definition. So if you're in a
Yeah.
1 through 3, maybe take a break until tomorrow. If you're in a 4 to 6, pay special attention to whether or not your emotions are affecting your trades. And then 7 to 10 would be the ideal range to focus on trading today. And that 7
Yep.
to 10, you're going to achieve from doing those things consistently, putting on your funky pants,
Yeah.
you know, having the bagel, whatever it is
Yeah.
that your routine is every single day. Um, and again, that's why it's literally there's no mention of strategy
Right.
at all
Exactly.
on this plan at all. It's
Yeah.
literally all about you and what it is that then your strategy is putting on this of telling you what it is you can look for and to do. Um, so yeah, I mean, it's we could we could do
Oh yeah, dude.
an entire thing on just psychology. I still like my analogy of the serial killers
Oh yeah.
and
No, it's a
just no
very accurate.
emotions.
Yeah. Yeah.
That one works for me.
Yeah.
So
You have
it
to
is what
treat
it
this
is.
like, no, for me, one of my favorite shows growing up was Dexter, right? And so like I don't know if you know, but it's all based around a serial killer. And that is one of my favorite things to think about is when you sit down at the desk, you have to be emotionless, right? And that's hard for me because I'm the type of person who, I mean, and if any of you have seen my Instagram, you're very aware. I like to dance, I like to have fun. I'm very so it's hard for me, but what you don't see is that when I'm in that trade and I'm watching it going up or down, I am robotic. And I may get excited afterwards. I may be happy, but that's who I am as a person, as opposed to who I am at the desk when I'm locked in and focused. When I'm locked in and focused, I up or down, it doesn't bother me because I know once you realize that you will capitalize on opportunities when they're there, you don't start to like. I now have so much confidence in myself that like if we see one of those Tesla moves where Tesla's going to make an $80 move in a day, I feel confident that I'm going to catch it, right? Like I am going to be able to capture that move. So in the days where I don't see moves like that happening, I'm good to really let them play out, right? And really not put myself in a position where I do something more harmful than good ultimately.
Yeah, and that's like you said, keeping the losers, as small as
Right.
possible, and limiting number of trades too. Like, I mean, there's what 7,000 tickers.
Yeah.
My
Oh man.
my 20 watch list has now turned into probably 40
Yeah.
of what I actually, I should trim it down because
Yeah.
I really only like to watch 20 or so of these. But I left ZS on there.
Yeah.
I didn't trade ZS like at all last year.
Yeah.
It ended up on my watch list last year somehow. Um, I guess it's like a Bitcoin thing. I
Something.
don't even
I
know
don't
what they
know.
do.
Yeah.
I don't know what they do. I have no idea.
Yeah. Yeah.
It ended up on my list. Um, and then, this week it set up for, a really nice trade.
Yeah.
Um, it was over $1,000 per contract
Yeah.
on the puts in a single day. Um, so I guess that's why I haven't really trimmed it down as much as
Yeah.
I would have
Yeah.
liked to.
No, and I think
BYND, stupid
right.
stocks on there still.
But I mean, I think the nice part about it is as long as it's a list of companies that you're familiar with how they trade, right? Like with ZS, we know ZS is spready. We know BYND is weird, right? And so if you keep them on your list,
Yep.
98 times out of 100, when you scan your list, you're going to scan right by them and you're not going to do anything with them.
Yeah.
But with those one or two times where there's a real nice setup on them, we're going to be able to see that, right? And so it kind of ties into the same thing I was saying about once you have that confidence to know that you're going to be able to catch and execute like the big Tesla moves or the big moves when we see them, right? And you know that if they happen, you have the skills to catch them. It's the same thing as like when you're flipping through your watch list, finding a setup that you feel good about taking as opposed to, this could work, right? I think that's one of the other areas, just to go on a little side tangent, but one of the other areas where I started to take the biggest strides, and I have you really to credit for this. And a lot of the people that I've worked with in like one-on-one lessons and everything from that, I've adopted a similar approach. But when you and I first started talking, I would send you charts sometimes, or not even charts, but I would be like, oh, what do you think of this? Or like, I'm watching this. And in the beginning, a lot of times you just shut me down and just be like, it's in a daily downtrend. Like I don't care. Like I'm not buying, I'm not going long. It's in a daily downtrend. Like stop, right? And then no, really, like and I would be like, okay, like note it, right? And I would just take a little note, like, okay, even though there's a bullish candle or a support level or something that I'm interested in, it's still in a daily downtrend. So we're not looking at longs, right? And I would start to pick up these little things from there. And so now, from all the people that I've worked with, a lot of things, a lot of what I tell them afterwards is, yeah, feel free to send me charts, but beware. I'm gonna shut you down if I don't like them, and it's not because I'm trying to be rude or be a dick. It's that because the more you don't need to take mediocre charts. You just don't. There's enough good charts out there every single
No.
day or every single week that if there's one where you're like iffy on it or it's mediocre, it's like, oh, it could be this. Like my favorite one is Boeing. Like for the past 6 months, or Boeing or Square Cash, they've been miserable. Boeing and Block or Square, they've been miserable. They're stuck in ranges. Now Square's been a good short, and Boeing has had a couple of days of being a nice long. But for months, people would send me Boeing or Square charts, and I don't care. I'm not like, there's no edge on those charts that we like. Like Apple's trading at all-time highs. Like let's just trade Apple, right? Like let's just wait for Apple to get a breakout and trade that. Like why are we going to force like a bad trade in Boeing, which is in a really long weekly bear flag range that like is kind of in an uptrend, but it's now in a downtrend. It's just weird, right? Like I have no interest in those charts, and so I think that's one of the things. I've hosted a few webinars and lessons, and the phrase that I've learned to use, or I created, I guess, is be more of an asshole on the charts that you trade, right? You have to be more of an asshole. If they're not good enough, then don't touch them, right? Just leave them be. And that to me will ultimately save you more money than any strategy change you make, is being more strict and being like, hey, if this isn't a setup that I really see as a quality trade, then I'm just going to sit down and wait till the chart gives me what I want, right? Like there's no shortage of charts out there. That's for sure.
No, definitely not. I mean, like I said, there's 7,000 different tickers. Obviously, some don't trade volume, but I mean, that's not the point. There's, there's a few thousand charts.
Within the 100 that we trade on a daily basis, right? And I would say that because there's 40 you watch, there's like 15 or 20 that I watch, and then there's the rotating market maker moves list, right? Or the ones that we just check every now and then. Of those 100 or so that are out there, one of those charts generally in a day is going to look good and provide some opportunity, right? And even within the 20 or 15 we watch, one or two of those is going to look good and provide some opportunity. Focus on the best ones rather than wanting to trade mediocre charts. Like Boeing, I shut people down for literally 6 months straight. And you sent me a Boeing chart. I didn't even look at it because I was like, I know what the weekly looks like. I don't care about catching a $2 or $3 move on Boeing. I want the $30 breakout on Boeing, right? Like, so I think that's a huge deal to me.
That happened in the room the other day. Someone, I don't remember who it was, but they were asking about AFRM, a firm. Yeah, and it was like 105, 106, somewhere in that range. And
they were looking for a move up to like 109 or something like that.
Yeah, they were looking for a few dollars. Yeah. And I mean, no, I'm like not like trying to, no offense to them or whatever. Like if you have a reason to take the trade, then obviously do it. But for me, it's in a daily downtrend. I don't think it breaks a daily downtrend till like 115. Yeah. And now we're maybe like a week and a half since that like AFRM thing. And it's currently printing right now 81.09.
Right. The move that you should have been asking on a firm on that one is, where's the bounce spot that I can find a swing short, right? Short swing, right? Like, because it was in such a strong daily downtrend. Like, so that, I think to me, I think that the two biggest takeaways, and these, if there's anything people can take away besides the psychology stuff, but in terms of the strategy perspective, that the two biggest takeaways for me, that really like flipped my trading in the right direction were: one, be more of an asshole on the charts that you consider quality enough for you to risk cash on, right? Because you're risking money. If you're risking money, they should be a good chart where you're familiar and you have an understanding of how to capitalize on it. And then two is that the phrase buy the dip and the phrase buy low, sell high are lies in a certain sense, because don't buy low, sell high. Buy high and sell higher, right? Like I want to buy things in uptrends that are strong and sell them for higher prices, as opposed to getting the cheapest price on buying the dip on a crazy red day, right? Now, with long-term shares, it's different. That's a different conversation. But for active trading, day trading, and even more importantly for swing trading, trade with the trend, right? If something is in a downtrend, don't necessarily try and catch a support bounce or something like that, because it's a support bounce in a downtrend. You're going to be battling a lower high, right? Like trade things that are in uptrends if you're going long, or short things that are in downtrends. As opposed to, so buy the dip is a lie. It's a lie.
You'd have been buying Piton for the past like 6 months.
Right. Like Zoom has, every time people see one little hammer on Zoom's daily chart, they're like, this is it. This is the bottom for Zoom, blah, blah, blah. It's like, no, like let Zoom come back up higher flip the trend, and then we can start to talk about buying pullbacks of it. But until then,
Yeah.
let it dip, because the dip, don't buy the dip. The dip is a lie. I genuinely believe that. The dip is a lie.
Yeah, which, I mean, to be honest though, there's, I mean, between last year and this year, there's been so many people that, I mean, when the world shut down, basically, nobody had anything else to do but play video games or, look at the stock market.
Right.
There's been so many people that, I mean, last year, what was S&P is up like 30%?
Yeah, it was stupid.
I mean,
Yeah. It was absurd.
Like, I don't ever remember a 30% year.
No.
And I've been doing, like, this year
Been
makes
here for a
11
while.
years.
Yeah.
Yeah, this year makes 11 years full time for me.
Yeah.
And I don't remember 30% up here in the S&Ps. Like, that's just insane. I don't ever remember a company like GME, doing something stupid like that. I mean, there was, KRTX, and there was the occasional short squeeze that lasted for like 2-3 days. Like, that was the normal pattern.
Yeah.
It'd go from 20 to 60, maybe 90, and then it'd come right back down.
They'd
Sometimes even in the same day.
Yeah.
Which is normal. But, for something to stay with this much pressure and continue to do what the market's doing for so long, there's a lot of people that just they haven't seen that other side of the market.
Right.
Which we really haven't had since we had like a little mini bear market in 2011.
Yeah.
There's a
2018.
low. Yeah, so 2011 was probably the most aggressive that I've seen.
Okay.
Now, again, I was trading in 2008, but I was long-term purchasing shares in Exxon, and they went down like $3 the next day. That was like my first trade. Legitimately, in 2008 was when I first started
I love
putting
it.
some money in the markets. So yeah, that was fun. And I was so fresh, and I mean, people listening right now, like, they're not even gonna be able to relate to this, but we were paying $9.99 per trade.
Per trade, yeah.
With like, it didn't matter if you were buying 2 shares. I mean, I was 17 years old. No, 2008. Yeah, 17 years old. I'm buying like a couple shares of Exxon for whatever it was, $90 some a share at the time.
Yeah.
Like, okay, come on.
Yeah.
Like $9.99 a trade. Like,
Yeah.
now I can buy 500 shares for like 3 pennies.
Yeah,
Like,
literally.
Like, come on. So yeah, it was definitely different times, but I was so new. Where I was going with that is, I didn't know that I had to pay the $9.99.
Oh, okay.
So my very first trade, and I see my account balance go down by like a little over $10, because there was a larger spread back then too.
Yeah.
Not by much, but a couple pennies. I'm like, I'm confused. Like, I don't understand what's going on. So to see that progression from, technology and markets, and obviously the bull run that we've had, there's going to be a lot of people that are going to continue to buy the dip, and then the dip is going to keep dipping.
Right. Literally.
It's going to happen at some point. And we adapt. We wait for the trend and play to the downside. Like this last move down here, we've been looking.
Yeah, got some nice shorts.
Yeah, and it was almost 100-point S&P move that was nailed to the tick.
Yeah, no, really.
So 46.63 quarters. The low of the day is what, 46.62s?
275s, yeah, I think.
Yeah, 46.62s.
Yeah.
So a point and a quarter.
Clean.
Yeah, straight down in one day. Well, a day and a half.
Day and a half, yeah.
But yeah, I mean, that's, and 100. I mean, if you're buying that, if you were buying it yesterday and you held on for 100 points in the S&Ps, that's $5,000 per contract.
Contract, yeah, it's brutal. It's not a fun hold. Yeah. No,
it's gonna hurt. It's gonna hurt a little bit.
That was gonna hurt for sure.
All right, very good, very good. Well, I think there's a lot more we could definitely talk about, but I know you do have, you got a meeting coming up, I think, in 10 or 15 minutes.
10 or 15 minutes. So I got a few more minutes if there's anything last that you want to cover. I got another like 5-10, so I'm good.
Okay, yeah, definitely. What do you think? being the what do you think made the difference? We've talked a lot about psychology, obviously
Right.
super important. Um, what would you say in terms of strategy? Someone looking to get into the markets, or they're watching this video, um, what give some context on strategy. We talked about a little bit about trends,
Mhm.
and obviously a lot about psychology, which I think is super important. But when it comes to strategy, where would you go with that?
So a few different things. I think that the biggest things that have really impacted my strategy is switching my priority to horizontal analysis as opposed to the diagonal, right? Which would be the trend lines and all that. I don't really even draw trend lines anymore. I don't remember the last time I drew a trend line. And I've now shifted to the candle and trend analysis, right? And that is that really it's this market structure that to me is like that's my secret sauce. I think is that like and it's not really secret sauce, but that's just what I do really well. I think is I'm able to like, and I mentioned this earlier in the room earlier today, where I had said where I had said I think that we have to consider the possibility for the Nasdaq to be putting in a daily higher low today, right? And now it's not a super clean. I need to go to the cues. It's not a super clean chart. It tested a little bit higher than we would have wanted and pushing back and sold off down further than I would have wanted. But that to me is where, like, just from a strategy standpoint, I am able to see most of what I see, right? I think the levels play a huge role in that. And I think that relative strength and weakness also plays a giant role in that. But for me, being able to like identify a chart and be like, okay, there's opportunity here or this or that. The biggest thing for me is now every chart that I look at, I'm always considering, okay, what does this daily bar like? Where is this daily bar going to take us next, right? Because I feel confident in my candle analysis. Like there was even just to scatter and go a little bit. There was one time where I took a trade a couple of weeks ago on AMD, and the basis for my trade was I looked at the daily chart. This was back when it was breaking out to the upside. I looked at the daily chart and I was like, what could possibly come next after this daily candle, right? I could see us consolidating, resting for a day. I could see us getting continuation, then immediately the next day. And on a small chance, I could see us reversing this bar completely and selling off to the downside, right? But like that was a big portion of why I took that trade. This particular one, no levels, this one was the candle and the trend was saying, okay, we're flipping back. It was like when we had triggered a daily buy, right? And so we're flipping back and getting that sort of back into the full blown uptrend. But I looked at it and I was like, what is coming next after this candle, right? And so the candle analysis and the trend analysis for me, that is like where I found my bread and butter when it came to scanning for charts, so to speak. Like that to me is learn market structure in the higher highs, higher lows, and then daily buys, right? The sells, the candle analysis as well. And that will take your trading to like the real next level for me. That was like the biggest shift. It's just, yeah, it was monumental when I really started to pay attention to whether things were in an up or a downtrend, holding and then up or downtrend, and then also where the candle was going to go next, essentially.
And you read, I mean, I know the answer to this, so I'm gonna ask the
Yeah.
question anyway. You read reading price charts bar by bar.
Yeah, so most people say I remember I even talked about you about this where it's like it's a hard book to read and it's dry and it's hard to get through. I read it in like 4 days. I read it, I sat down, I loved it. I loved every minute of it. I just love I don't know what, but it was because it gave rhyme to reason to stuff that I'd been staring at for 4 years or three at the time, 2 years. At the time, 2 years, right? And I'd been staring at this stuff for 2 years without rhyme or reason to it really. And then I started to hear what he was talking about, the principles and stuff. So what I'll even say is that I don't use like the setups that he talks about in that book. Like he said, like this was an MS2, and I don't think you do either, right? Where he's like, this was an MS2 short. I took the MS2 short back there, like, and he breaks it down very specifically. That's not what I used and gained out of that book. What I used and gained was the principles of it. There are things that like when a candle breaks a previous bar's high, what should we expect to happen with that candle? It should continue higher, right? If it doesn't, it's failing in a sense, right? And we start to get another piece of information where we can glean in what's going to come next, right? So everything in the market is either going is a pattern that's either going to work or fail, and from that there's something actionable, an actionable piece of info we can take from it, right? And so rather than the actual setups and everything focused on that book, what I decided to do was say, okay, I'm going to learn about all of the principles that he talks about and apply them in my own sort of way, right? So that's why there was like yesterday, I ended up catching a really nice trade on Tesla, and it was right when we had swept. I went to the long side, so it was counter trend. We ended up selling off, but we'd swept the previous day low. We had gotten held there. And I ended up catching like a 25-point move back to the upside because I was using the principles I learned in that book, right, and that kind of thing. And that book, huge recommendation, even if it's tough to read and tough to get through. Yeah, that one changed that was like one of the first things I learned from you, because you told me to read. You told that was the books in your book list, and I read that book sort of before I had like really started to learn what your strategy was. And that book I was like, holy, like it just cleared so many things up. And I was like, all right, now I know Eric knows what he's talking about because he recommended this book.
Yeah, there's three like books I think you essentially have to read.
Yeah.
When it comes down to, wanting to go this path as a trader.
Right.
Reading price charts bar by bar, Al Brooks definitely. The Mark Douglas, either one of Mark Douglas' book, Trading in the
Right.
Zone or Disciplined Trader. I'll kind of lump those together. We'll call it
Right.
two books in one. And then I think Reminiscence of a Stock Operator is, from a story standpoint, just super like it gives you a glimpse of what like the potential is, but also like the downfall side.
Right. Yeah.
And obviously it's not that doing it twice is not something you want to do.
No.
Because if you read the book, then you know how it ends.
Yeah.
And it's just an insane, obviously an insane fortune that he had in order to lose twice.
Right.
And I guess his, screen time was a little bit different back then as well, because it was, a board and tickers and
Yeah.
things moving, which is super. I think it's cool. I actually have one.
Oh yeah.
Did I ever show you?
No, I don't think so.
So I'll send you a picture of it. It's from like the 1960s, and it's a board of the indices.
Okay.
And it has the different hours and what the closing prices were, and basically allows you to like construct your own chart, if you will.
Right.
And it was actually fed. It had a power line or a cable line to it somehow, and then obviously I'm not opening up the back, but there was like rollers and stuff in there, and I'm trying to bring so it was a roller, like the old wheels, and
Right.
it would be like 9, 8, 7, 6, 5, 4, 3, and a 0, and whatever it ended up being, it would change those across the deal.
Oh, okay. Yeah, I see what you're saying. Yeah.
And it only went up. It was for the Dow. It only went up
Okay.
to essentially four figures, so it couldn't go over 10,000.
While back then. Yeah.
Yeah. It was a while ago.
Yeah.
But it was super cool. Yeah, I'll send you a picture of it. But yeah, it was a little Wall Street memorial I had to pick up one day.
Yeah.
So
I will say I'll add one book to your list of 3, just because if you're going to learn the technicals, so this in my list of 3 includes the same Trading in the Zone and reading price chart bar by bar. A third one is there's like, find something more basic about technical analysis than bar by bar, just so that's not your first experience with a technical analysis book. So that's why I always say there's this one that's like 100 pages from Fred McCallan or something. It's charting and technical analysis, and it's like it took me like an hour to read when I was on a plane one time. Super basic, but if you read that, then at least going into bar by bar, you're not so overwhelmed by how Brooks telling you the complicated details of the mind of a futures trader.
Or read a little Steve Niacin, the candlestick course that he has.
Right, something like that. Yeah, anything basic to prepare you for the hell that is bar by bar.
Yeah, that one's tough.
Yeah.
But I think it's necessary. I mean,
100%. That is I credit that book as like the single bit, like that is the book that took me to pack, because I just started, and it gave rhyme to reason what was happening on the candles for me. If there's something that clicked in my brain about just the way we interpret movement, and it came from that book, right? So huge.
I like it. All right, sir. 3 minutes to go. I'll let you run
Yeah, man, this has been a ton of fun. Thank you again for pushing to set this all up, because this was worth it, right? Ton of fun. And I think that I hope everybody enjoys it. I hope you guys gain something out of it, right? Because this is a long journey. It's a long journey to find consistency. And I'm glad that I found my way there. That's for sure.
We might have to, I kind of like this setup now. We might have to do a little podcast or something.
Yeah, set something up.
If the audience wants it.
Yeah, if it gets positive responses, I'm definitely up for it.
Yeah. So I want to thank you for coming on.
Yeah, bro.
For those of you listening, this is Jake Ricci. I'm gonna mess it up every time. I thought about it too before I even said it. I'm like, do I just say Jake? But yeah. So again, thanks, Jake, for coming on. And you guys can find his socials down in the description below. Like I said, I will leave a link as well for the trading plan sheet. You guys can check that out as well. And again, I hope you guys enjoyed it. Feel free to leave some comments down below. Give us a thumbs up if you did enjoy it, and we'll do another one.
Great, sounds good, man. Have a good rest of the day. I'll talk to you soon.
All right, man. You too. Take care.
Later.